The Australian share market drifted to a 7-week low today as investors remained on edge. Unsettling the market were signs the European crisis was deepening, with nervous investors taking up only 60% of a German government bond issue. Despite the setback, Germany still refuses to allow the European Central Bank to take decisive action aimed at supporting the debt-laden Eurozone members. Here's Philip Lasker.
The small 10-point fall on domestic markets masked some big and growing problems offshore.
All of us must regard the current situation in global markets with utmost gravity.
American and Asian money is being pulled out of Europe. Even Germany, Europe's safe haven, could not raise all the money it wanted to refinance loans. Its government bond issue was badly undersubscribed.
Simply because in fear of Germany as the paymaster of the euro area having to bail out all of the other countries. So that might be the first sign of people are also losing confidence into Germany.
Europe's divisions are becoming more public, with the European Commission calling for jointly issued Eurobonds.
Implemented in the right way, the joint issuance of debt in the euro area could bring tremendous benefits. It could lead to greater financial integration and to the creation of a much larger and more liquid bond market, comparable to that which exists for the United States treasuries.
But German Chancellor Angela Merkel is refusing to be pushed around by the markets or the European Commission. The German leader is resisting calls for what is effectively Germany's support for the borrowing of all euro countries through ECB bonds. In a forceful display, she warned against fiddling with the bank's strict inflation-fighting mandate, saying the idea just wouldn't work.
Genau das wird nicht klappen, meine Damen und Herren.
It's the type of behaviour that's worrying Treasury officials in Canberra.
What's going on in the euro area is very troubling and it's getting more disturbing. I'll leave it at that.
Is it any wonder investors are sitting on their hands?
There's not the same breadth and depth of investor support as you would have found several years ago, where you would expect considerable buying at these kind of value levels.
At least today's fall on the local share market was far milder than that on both sides of the Atlantic and Japan.
Perhaps it's because our market's down the best part of 10% over the last fortnight or so that we might be seeing a bit more buying support based on the fundamentals and dividends.
Christmas can't come soon enough for those looking to temporarily escape the tension of global markets.